Hey, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for November 13th, 2023. If you stick around to the coaching phase, I'm going to be doing a demo of Rajiv's research week offering. He's doing a little project in the foundations course, um, in which he's put together a little plan here to trade the 3 minute opening range breakout on 30 common stocks. He's got a simple setup, a simple exit strategy that's either going to collect 2R or lose 1R or exits at the end of the day if it hasn't breached that. He's looking at 30 common stocks. The initial back test of it over for 100 days had 152 trades, both long and short, with a 0.43 expectancy. If you go back 200 days, there was 357 trades with a 0.17 expectancy. So that's about, you know, 1.5 trades per day, and with an expectancy of zero point 0.4. That's 6R a week with 0.17. That's about 2R a week. And it's not an optimized system, and I've got some concerns about and clarifying questions about what he's doing for the setup, and the opening strategy is not necessarily clear. But he's going to robo trade that with live money, and so that looks pretty promising. So I'm going to go through this rule set and this experiment and give him some feedback. And I'm going to include that in the research week where we're collecting the final sets of videos for this year's research. So if you stick around to the end, I'm going to go over that. I know a lot of you guys want to get on with the business here, so we're going to jump to that. But it looks pretty promising for some robo trading, and it basically is going to give very positive insights into the potential of the Z3 pinch, one of my favorite setups. Well, let's go to the hybrid 30-minute portfolio and get on with the business here. So we're starting off with Alcoa. This is a 30-minute chart. This yellow box, as always, is today's trading range. We get a COTA 2, standard risk to the bottom of the dragon. When the R10 rolls over, we take the dragon skin exit. That gives us about 0.5. And making a little bank on that. AI. So this one was one we carried over the weekend. We entered this one here, and it closed really well. Today it gapped down to here, so I exited. It sold off, and then when it reversed, that's like a 1, 2, 3 entry. I went ahead and put the position back on. That was so close to the exit that I'm treating it as if that original entry was still on, because we didn't lose much in that transition state. And this thing is closing very well at the top of the stack. And that's holding 1, 2, so +3. And as we look back over here, because that had cleared the R10 hump, I decided to keep that. Our next target would be the next R10 peak. which is right around 29 or 28 and a quarter. So there's that's the next test, is this price level. And if that goes, then this thing is free and clear because it'll be above the 5-day high, which is this blue box, which happened back here. But this is the real test. That's the statistically significant test, because that's where, just time for a quick lesson here. That's where all this price action occurred, was right inside of that range. And so that's where the R10 rolls over, right? So that is the statistically significant level, and that's where the PSAR flips to. So this long tail to the upside is noise, really. That's really the significant resistance level. Like, it could only have one blip up and then it quickly failed. So this is not resistance. This was the resistance. That's where everybody that was buying it on the way up decided to stop buying it. So nobody came in here to buy it. That means this is not really significant resistance. The decision point where the traders stopped buying it was at the peak of the RL10, which is why we set the PSAR flip to that level. So when I bring that over here, I know that this has to get through 28 to be significant. And I'm really looking to see if the R10 can get through there. If the R10 can get through there, then that's going to be very good. But if this just comes up here and then cannot break through that, that's going to be really important, because now it didn't even make the blip like it did before, and it's starting to fail, and that'll be a clear indication to get out. So this is really the test zone in here. Higher than today's high, but lower than the previous statistically significant resistance, which interestingly is also where the peak of the river failed. So how about that? Notice at the peak of the river here is also where this R10 level broke, which is why this was a reason to hold it, because it's north of that resistance. My brother asked me, standard risk is the R10. No, the standard risk is the distance from the entry down to the PSAR. The standard risk defines the signal that tells me that trade is not working. The price that tells me that's not working is a violation of the PSAR. So when I say a standard risk, I'm measuring from the decision to enter, in this case, the R10 crossing the dragon, and the price level that tells me that it failed. Now, it also turns out, as we talked about on Sunday for over an hour, it turns out that this happens to be in AI. The R10 is 21 cents. This turns out to be really close to 21 cents. So when the size of the PSAR flip and the R10 are the same thing, it just is symmetrical and clean and convenient. And you'll see that happen sometimes on the 30-minute bar, but not always. It's more usual to see the PSAR flip. It's normally you see the PSAR flip equals the R10 on the 3-minute bar. It just so happens that this was such a narrow band that the PSAR flip was small, that it was close to the R10. But you can see over here that standard risk box I was going to the top of the dragon. That is half of the the PSAR flip, and the same here. So this turns out to be, this red box turns, as since it's the R10 on the and that's the standard size of risk I would use on a 3-minute bar. It just happens to work out in this one to be the usual size of the risk box that I can manage in these symbols that I've been trading for 20 years. So there's a certain familiarity that comes with specializing in symbols. Anyway, AI. Amazon. This one also featured that same kind of idea where Friday we had bought the SSC and it closed well, and today it gapped down, so we exited here. It sold off, came back up, and I just re-entered on strength in the market as it crossed the Bollinger Band mean. And there's that usual standard risk that I'm using. And it closed pretty well. And that's about 0.5 R. And I wanted to hold on to it because it's tech. And tech led the way in the afternoon today. Caterpillar. Friday's SSC because it's here and it's here, and there's the sharp sell-off, and there's the reversal in the R10, there's the RLXD, there's the PSAR flip. That is an SSC with the usual risk, and that one closed very well. And then today it just continued to go, and then when it rolled over and hit my little skin of the dragon, you know, I was tempted to hold it. I waited an extra bar and basically just locked in 5R. Couldn't hold it any longer. And I said, you know, for a 2-day trade in Caterpillar with the world at war, that felt pretty good and reduced the overnight risk. And I know how to get back in. And then if this starts showing weakness, I might be interested in the short side tomorrow. So let's bank 5R and just call it a day on that one. Cliff, this was an SSC off a double bottom and really went nowhere all day, so dead money. Exit. CVS, same thing. SSC, dead money, scratch. Disney, we tried the RLXD and the PSAR flip continuation, tracking it to the bottom of the dragon there. And it closed marginally. I'm not happy with this, with holding this one overnight. I think I should have taken half an hour off. But I was persuaded that there's some buying interest in this based on the size of that gap. Dish Network, hard to see that one. Let me zoom in a little bit. This was like a 1, 2, 3 entry. Really went nowhere for a scratch. Extremely wide standard risk box. Devon Energy, the R10 rolled over when the R10 came through the dragon. That gives me a supported fall crossing. Really went nowhere for about 0.2 or a scratch. Electronic Arts lost 1R on the failure to follow through. Probably stuck around too long on that one. Emerging markets, half an R, gave back a half. This was a Kata 2 entry, so you got the low, higher low. The R10 had reversed, was coming out of the dragon. Everything was rising. Half an R. ETHE, holding Friday's gap and go. And now that's up to about 2R, and we'll give it another day. EWW cashed Friday's SSC, made 1R. I probably stuck around 1 or 2 bars late. Brazil took the COTA 2 entry in the morning, held support at the PSAR, standard risk. That's, as you can see, that's about 15 cents. And we're holding an R overnight. Intel lost 1R on the big adverse gap. You know, we were holding over an R Friday, and then it gapped down 2R against us. So we lost 1R, and then there was no trade. IP took the collapsing dragon short in the usual way, holding 1R. That's my bet on if there's weakness tomorrow. IYR real estate 123 entry, scratched. Coke. Friday's SSC and 123 entry closed pretty well today, holding 3R. Regional banks, no trade. Mattel, no trade. I missed the short on that one. McDonald's again. Let me see, Mattel, yeah. McDonald's. So this was a 123 entry Friday, deep value play. It closed very well, holding 2R on Friday afternoon. Today it continued to gain. And finally, in the 2R battle drill, I just held my nose and added a second position. Closed pretty well. So we're holding about 4R on 2 positions. I'm going to watch that one close. That one could be vulnerable on weakness. The PSAR, I'm going to respect the PSAR as the trailing stop on that one. Merck, COTA 2, right by the numbers, holding 2R overnight. Microsoft closed the, Friday's emerging dragon. It was really looking good, then gapped down hard and sold off, and was probably slow getting out of that. I gave it all the way to the PSAR dot, and then so we kept about 1.5R. Probably gave back too much. Marijuana. So the COTA 2 entry, it ran way up, and then I held it as long as I could, gave back probably too much, kept a 0.5R, then missed the afternoon reversal. NVIDIA, no trade. Clean energy, COTA 2, I'm holding that one overnight, about 0.5R. Not feeling good about that one. Rivian, 1R on a COTA 2 continuation. Yeah, the S&P, you can see, was a gap down and then pretty strong in the morning, and then held price level throughout the lunch and then the afternoon. Not much follow through, but it did not fail when it had a chance. I actually take that as a positive sign. Treasuries had a little bit of strength from a morning hook. Tesla, this was the 1R that we cashed on Friday. This is a COTA 2 continuation re-entry with standard risk to the bottom of the dragon of about $2.50, maybe yeah. And then this closed very well, and we're holding about 3R. U.S. Steel, basically get the adverse gap. We were holding this one on Friday, about an R, and then it gapped it against us, and we got out with our skin, so with a scratch. So that's the 30-minute charts, hybrid swing trades, mostly standard work today. All right, some sniper trades of the day. All right, so this is an opportunity trade in the afternoon. And let's see, I'm trying to remember who this is. McDonald's, right? So we had been trading McDonald's in the morning on the 30-minute, and this was an opportunity when we were stalking it. As it came out of the lunch, it gave a, let's see here. So this was this is where it went into the winter. So that's looking like a harsh winter. And then it bottoms out. So it goes overbought right here. So I come up and I check, and I'm looking for the upticks. There's some upticks all the way through here, but I don't get a higher high until this one. Could have entered there on after that higher high, but that felt like a really tight wrist box. So I waited an extra bar, set up my entry to take out this bar on that uptick. This next bar opened here and immediately went higher without testing lower. So I'm long from here, and I'm taking as my signal, my standard risk is to the bottom of the price stack. Check or hold. And this one probably stuck around too long on that one, but there you are. This runs up real quick to here, comes all the way back, and then starts to decay. The R10 is still just, this is where the R10 rolls over, and that's why I decide to exit here, because the R10 has now rolled over. It's fallen back underneath the Bollinger Band mean, and I'm able to keep, a no lose plus dinner for two exit on that one. So that's one where gave it some room to play, gave it some string, and it just never really materialized. Now I'm stalking it as a Kata 2. And what I like about it is you have that upward, you have that Kata 2 style. And I like the fact that the PSAR never failed. And I'm looking at this sort of as a Kata 2. And it's getting ready to test the Bollinger Band mean again, and the dragon is rolling up. So I like all that. So I re-enter here. Same size wrist box. Uh, 2 bars into that, and I should be able to raise my stop up to probably here. In order to lock in that no lose plus dinner for two. And I notice that I want to have that in because I already see it starting to stall. It does not fail. Luckily, right? So this is the bar that is really questionable because it made a lower high and it was a doji. So you wonder what's it going to do, and it voted to the upside and then continued. So now we've got a little more than 2R in hand with momentum, and we've cleared the resistance. So second position. and this is the turbo trade in McDonald's. What I want you to notice now is at this point, we've got two positions in. You know, 1 and 2. The PSAR has now made it 3 dots above our entry. So if I was doing the Uwe exit, I'd be up in here. Let me make that red. Sorry. And then I could decide, do I want to trail it with the PSAR dot that probably looks like that? Do I want to trail it with the spine of the dragon or the skin of the dragon? And then if I want the second position to be in the money, then I at least have to go to about a 2-bar low and just leave that in place. And then when whichever one of these trailing stops I'm going to use, like let's say I was using the spine, if it comes up here, then when it hits that, then I would pick up the spine of the dragon. But meanwhile, I would honor that just by locking in like a mountain climber, just tapping that protection in. So that's a technique of when this thing has such a nice run up on 2 little surges and it leaves the PSAR behind, you can now start using the dragon as a way to calibrate how much you want to lock in, or what bar low do I want to have? 1 bar low, 2 bar low, 3 bar low. I like to get that second position in the money so that I can stop worrying about it. So to me, any one of these, either one of those, 1, 2, or 3, would work as a reasonable stop. And so it's kind of moot right now. You say, well, now that I see this, I can just, well, here, or take half of that bar. 3, 2, 1. And lock in this extra piece now. So you make a decision. Do you like 1, 2, or 3? So at the tail end of this trade, you know, you get that one final burst up, and now you can see it start to diminish. This bar right here is the first time that we've seen the close lower than the open. And then when you get the lower high and a doji, then you wouldn't be dumb to take that right there. And now at this bar, when that closes, you have the R10 rolling over, and now it's fair to use the skin of the dragon, and then that's a good exit right there. I stuck around on this one. I locked that one in, and then I gave it to this to take that out, and we cashed 1, 2, 3, 4R on this one, 1R on that one, plus a little bit of slippage. So that's about 5R on that series. A fraction, and then about 5. So this is driven by the fact that on the 30-minute bar, McDonald's was one of the strongest and steadiest plays all day, as you will recall from. This is the McDonald's play on 30 minutes. And it was already in the second day of a really strong, steady move. And we got the second position in earlier than the 3 minute. In fact, what we saw was where that 3 minute that you just saw, that was this move on 3 minutes. I think this was the first one that didn't work much, and then this was the Kata 2 reentry somewhere in here. So you get that little burst. On the 3 minute, that turns out to be plus 5R on the turbo. And when you can do that, what you can do is then say, look, I'm going to use that turbo money to fund the swing trade risk, and now I can replenish the ammunition in my swing trade account with money that was earned from the intraday turbo. So you're using the turbo trade as the engine of gains, and then offloading the load to the longer term swing that has a wider stop. So this one is, let's see, who is this? This is Tesla. So we're going to just take a look at a WMB3 technique on this one. So this is Tesla at the open. Here's where Tesla closed on Friday. I'm sorry, like this. That's like a Z3 pinch you'd find, I think, with if we looked at Rajiv's ideas. Then it opens, it gaps up to here, runs all the way up, runs all the way down, closes here, and that establishes the OR3. So if you were an OR3 trader, then it opens here, runs up, and then comes down through here. So if you're an OR3 trader, you'd end up getting short right here. Oops. Thought I could just move the dot. Okay. So that's where the OR3 trade would get short. But I wanted to demonstrate that I was doing the WMB3 on this one. So if you had taken the OR3 trade, you would not have lost money on that one. What I want you to notice is that by the second bar, you've already gone into the oversold condition, so that triggers WMB3. That triggers the W portion. So now I read up, and now I'm looking at the MACD. And what I'm looking for is an uptick, but I don't have an uptick. I still have downticks. So I can't go long any of those. But if you were the OR3 short, by this time you'd already be in the money. Just saying. If I was short with the OR3, I could use the WMB3 technique and stalk a good exit. And so I could use a WMB3 entry signal as the exit to this OR3 entry short. Now I get the first uptick right here. So on that little uptick, I can now come up to the bar. This is the bar right here. It opened, it ran all the way up to here. So I can now put, I have my MACD uptick. This is now my B candle breakout, so I put that breakout. So now when this opens here, if that continues up, then I'm getting long right there. Checker hold. And if I get long right there, I already know that my stop is going to be down here at the belly of the RL10. That's the signal that gets me out. And that's, so I end up getting in, and I've got my stop in at that black line. It should make it red. Sorry. So my stop is here. And it's starting to work for me. Now, just as a point of reference, if I have, if I take this one short, and this is now in my favor, and that's the peak of the RL10, when that reverses, I want to take that exit right there at the skin of the dragon so that I could make bank. I could have gained that little bit. You know, this is a case where waiting for the WMB3 entry would have lost a little bit of money. So when the R10 reverses, that's the dragon skin. Just as a point of reference. Spring has turned to summer. Now I get some traction. So this is a case where, again, the trade-off decisions you make for your, I might have started off with the Wu-Wei exit, in which case my stop remains here until these PSAR dots, until I get 3 dots above the entry. So if I were to get 3 dots above the entry, then on the 4th dot is where I would jump my stop up to here until the Bollinger Band mean came through or whatever. But what you can see is that these 2 bars right here were actually really strong and closed very well, and I'm into the summer. Now, I don't know how long that's going to last, but I know that I have this much of a gain. And if that's my risk, I'm holding about +1. So I feel like the Wu-Wei exit in this case is too slow. So that activates a little sniper circuit in my brain, especially after it had the first surge up and then just kind of went sideways for those 4 bars, and then it voted up and up. That just feels like a clear signal of a gain and my money. So I think I've got to be either here to lock in that much, or, and that's really kind of like the spine of the dragon, or I got to be at the skin of the dragon already, or a 1 bar low. Or if you were aggressive, you could say half a bar. So 1, 2, 3, 4. What do you like? I see a vote for 1 or for 2. Well, everybody's liking 2. If you were a person that put it at 4, if you do that, you might as well just add a second position now, right? Because if that's going to get you out, then losing that much on your second entry won't make this trade go negative. But then if it does work on the very next bar, then it's an easy thing to just lock that in and get the second position in the money. If you're at 2, you can't put a second position in here because if you gave back that much, you'd make the first position lose money or go back to 0. So depending on how aggressive you want to be and how you decide to engineer your stop, if you decide to go here, go ahead and put your second entry in. If you decide to go here or here, just let it go. And then wait for 1, 2. You got to wait for the 2-hour battle drill somewhere up in this region. Is that clear? Well, obviously, we should have put that second position on. Should have known it was going to do this. So as soon as you see this taken off, you kind of get this little, rising lows. And then 1, 2, 3 bars, and it kind of stabilizes. And then you get that move. You say, okay, oh joy. So now I'm up very close to the 2-hour battle drill. So whether you put that on a second position on or not, you got to decide where to put your stop. Do you want a 1 bar low, skin of the dragon, spine of the dragon? That's already too far. Belly of the dragon, PSR. This is where, by the way, the Uwe exit, which that successful move up into here would have said, all right, you can now move on the next bar, you can now move that up to here. So in my view, your choices are 1, 2, 3, 4, 5. And to me, I don't want to give any of that back. I like 1. I'm just going to go out on a limb and say 1. And that's whether or not you put the second position on or not. I think now you got the 2-hour battle drill, and you could put your stop there and then try to get that locked in as soon as you can. All right, so now we have this decision to make. We've got our 1 position in. It went to the summer here. We've got a nice, strong, decisive move with the PSR out of the noise. The Bollinger Band mean has actually come out of the noise. So this is a legit move. That's leg 1 to here. But now we have the first bar in a while that had a, now this was kind of a doji, but that was a warning, but it reversed higher. That's good. And higher and higher, but now lower. And now the R10 has rolled over. So I'm automatically moving my stop up to skin of the dragon and just locking that in. And then I'm going to watch to see the PSAR go. And I'd like to see this open here and then just take out higher. That would be nice. You know, break above the peak of the R10, make a new high. That would be good, but I'm locking in that. Checker hold. And I should have exited there. Don't know why I didn't. With best play, correct play in my mind would have been taking that exit and then re-entering here. So that was lucky on my part. The only thing I can say is that with just one position on, there's a little bit more wiggle room than if you'd had the second position on. So if that's the re-entry, that thing is just, that's in cruise control right now. And now that the second position is on, you definitely got to take that one. So that's Tesla using that WMB3 style entry. I'm not really fond of the way I handled that. I'd like to have exited and then taken the re-entry. But the first position gets 1R, second position, or 3R. So if you played it poorly like I did, you got 4R. If you played it correctly, it would be 3R, because that would have been a cashing 2 and then re-entering and picking up 1. So incorrect play earned an extra R. Watch out for those bad habits. You end up starting to trust your judgment if that happens. We're going to see Alcoa again in one of the traders, and I marked up his chart, but it's a little easier to see the lesson that I'm going to share with you here. So this is Alcoa. Now this is a case where he's taken the OR3, so I'm going to take the OR3 also. If you take it as a hybrid frog, you end up putting like the R10 would be like that, I think. And you might have actually gotten short here. But we're not going to play it that way. Now, if I take the OR3, the price that gets me out is either going to be the top of the dragon or the PSAR dot. In this case, it's kind of the same thing. So I'm going to set that equal to 0.2 of a position sizing risk. And I'm going to make that 1.0 execution risk. Execution, because this is the switch, this is the kill switch right here. That makes, in this trade frame, that makes this noise. So any exit in this, inside this red box, is exiting in the noise. And if I'm committing to that, then I'm going to watch the PSAR, and that's going to be my decision. So if I get out here a certain time distance, and if the PSAR head comes down to here, and this thing reverses, and I get out, then that's the signal that tells me this trade has stopped working, because it's supposed to work. It's supposed to stay on this side of the PSAR for as long as it's working. Check or hold. But it's this size box is my 1.0 execution risk. Now that OR3 is actually pretty large. And if I use the R10, and if I set the R10 equal to 1.0 execution risk, I want you to notice that that's not a signal. There's no technical reason that explains why this is not working based on the way that box originally gets drawn. A reason to get out here, though, is that the R10 reverses, and now I can invoke the skin of the dragon, and I could just legitimately decide to exit it right there. And if I do that, and this was my 1.0 loss, then I have to eat a minus 0.5 execution risk. My preference is leave it alone and execute with the PSAR. Or I also understand that one, but I believe if you exit here, you're exiting in the noise. Because you don't even have a 1, 2, 3. You don't even have a 1, 2, 3 exit yet. Now, a 1, 2, 3 exit would be here, because this is bar 1, that's bar 2, and then this would be bar 3. So I wouldn't be offended by that. Just want you to realize that if you start thinking in here, your cognitive processing is enormous. Now you're not even close to a WMB3 entry on the long side. So I say just stay with the PSAR. Which means I think the correct exit would be right here. I also think that is a reasonable SSC, because you have the harsh, now it sells off. I think you could stop and reverse right there. So let's remember where that dot is. So that's an entry right here with a stop right there. And now that equals 1 execution risk. How is that a harsh winter? It's a WMB3 entry. It's in the winter. You had 2 RT, and almost a full frog box failure. So it's certainly a 1, 2, 3 entry, or it's a WMB3 entry. Or you could not take the trade. I like the WMB3, especially this looks like a fake 1 go 2. I do that all the time. And dead money. So if you don't take the trade, you don't take the trade. You also that's that's enough of a gain that I see this as a kata 2 up in here, where the R10 has now gone from winter, spring, summer, across the Bollinger Band mean. You can take that trade and then come down to here, and there's your risk box. Kata 2. And you won't lose money on that trade. So if you just relax a little bit and if you get short on that one, exit here, and that's 1.0. This is about a minus 0.6 on one trade, and either take this one or this one with your risk box down. Whoops, risk box down here. You're in that trade. Either I wouldn't be offended with an exit here, or an exit there, or some exit up in here. And your entry was this one. So you're either going to get this one or that one, which pays for the original one. So you got a couple choices on how if you want to trade that opening 30 minutes. I like the OR3 there. I like the stop and reverse on a fake 1 go 2 because you have a tight river in here. My point is that you want to use the wider stop for your 1.0, especially when the 3-minute bar was that large compared to your R10 risk box. So, um, yeah, the R10 crossing the Bollinger Band mean right here, the middle of the river. The PSAR flip, winter, spring, summer. You got to be able to get an entry somewhere in that box. And then you just put your stop here at the bottom of that like that. And then you're good to hook. All right. Try to find the traders. This is a British pound, and my one of my points on this would be let's see. So he's getting short. Let's see, getting short here, and if you're picking that as your 1.0. You're getting out in the noise here. And then you're stopping and reversing inside the channel, inside the noise, and then exiting here. So you're just chopping around in the noise. If you just live with if you pick that as your signal to get out, nothing's happening here. You're going to be in the money from this point on instead of getting minus 0.3, minus 0.5, minus 0.5 because you're trading inside the Crocodile River. If you're going to trade with that tight of a stop there, anyway, there's no real pattern that I see in there. Unless you're going to say that's an emerging dragon. I could see that, I suppose. I think I'd come back to here. And then this is exiting in the noise, and that's not a stop and reverse because you're in the middle of the noise channel. I think if this is your stop, like you said, give it a chance to work. Alcoa. So this is his Alcoa trade. And again, so he's got about 3. So I like that risk box that you're choosing the PSAR, but then you're getting out at 0.3. And then using this as your risk box. That risk box, if you just respect that, gets you that exit. And you will make that trade instead of getting chopped around in here 2 extra times. NVIDIA. Mostly scratching. These are inside the channel trades. I like that one as a Z3 pinch breakout and then a scratch. I don't see a problem with that one. I don't see a problem with this effort and then scratching that. So those are actually really okay. There's just nothing. It just didn't move, so it's not going to gain or lose much. Here's one where That's a Z3 or OR3 breakout. And there's my PSAR. This might get you out, which is fine. You get to make that move on one trade. And instead of getting 0.7, that should give you about 1.4. And then that reentry should get you paid. And that one should scratch. So we might have had a micro improvement on that one. And then these are in the chop. You might have seen that one as a fake one go 2. That's a stretch. I just think you're holding the reins a little too tight in here. This is the New Zealand dollar with Brian. One R stops and reverses. Maybe a half second late, so that's 1.6. 33R over 68 trades, 0.4 expectancy. And stays out of the chop. That's a pretty good pair. Chopped around quite a lot. Finally gets it going. This exit, once it starts going and rolls over, our exits should be here or here, not here. That would save you a piece. Then our reentry should be here, not here. On this move here, there's an SSC, and when it comes back to here, I think you can get long here or here instead of here. And then that becomes a much better trade because you can now collect that on that much risk, and that would be worth 2R, and that turns your whole day around. OR3, entry, wrist box, probably exit there or here. That would get you paid. Stayed out of the chop, that's good. So long. I'd have thought really hard about being short right there. Probably scratched. And then PSAR flipped. That would have changed your whole day. Then you could COTA to here instead of here, and then get paid a fraction. And then this is late. Like if you entered here and then the R10 rolled over, you could be exiting up in here. You might have then taken that one for something. So I think we could have turned that around. I think, is that an OR3? Or maybe this one is. When this one does not work and reverses, you're using the PSAR as the initial signal. So when that comes down here, you could exit here. That's still a pretty reasonable reentry. Waiting for the R10 to get through. Then I'd cut it here. And then stay out of it the rest of the day like you did. Good job. Tesla, you've seen the previous one. Yeah, that's about a 5 or 6 hour trade in Tesla. Tesla has the eyes of the world on it, and it tends to be trending more than like a Pfizer. This should be a stop and reverse. And now you're skipping these. Why are we skipping them? This one should get paid to here. This one should re-enter and get paid forever. Clear caught at 2. Nice. Excellent exit. Re-entry here gets paid. Emerging Dragon. SSC here. Emerging Dragon there. Boy, I sure want to get that. There's a collapsing dragon in here. Yep. Yes. With an exit here and then this is actually an SSC right here. And that's a Kata 2 long with an exit right there. And then notice that price level. This is where the gold contract is bidding. That is a really important price level. And when it doesn't fail, that reversal trade is amazing. So keep an eye on that price level. That's significant. And there were 1, 2, 3 times during the day that works. Yeah, collapsing dragon. Or that's a Kata 2 short, sorry. Collapsing dragon would be here below the point of the R10. Yeah, the collapsing dragons you didn't take are the ones that worked today. So naturally that's going to be the case. All right, good work today, guys. I'm going to cover the Rajiv's tomorrow. I went longer on the coaching today than I wanted to, and I'm going to get you some time off, and it's 10 o'clock. So we'll catch him tomorrow. I'm going to post the coaching of his rule set and his test in the research weekend. That's where it belongs. So if you're interested in that kind of work, sign up for the research weekend. All right, take good care. We'll see you tomorrow.